If you're struggling with market structure and struggling with which direction the market is going, then you're probably missing these key elements that are very simple but very important. That's why I'm going to show you exactly how to identify market structure so you can increase your probability and trade in the correct direction. Also, grab my ultimate trading guide. It has everything that you need to know about the basics of market structure, and it's free. Alright, so the first step to accurately understanding market structure is understanding what highs and lows are. These are the foundation of market structure. So I'm going to explain it as simple as possible and keep this very brief, but give you guys as much information as I can. Essentially, a high is when price comes up and it pivots down. That pivot point, that like almost V shape that it leaves at the top, is what we would call a high, right? So this is a high. Now, that you know what a high is, what is a low? Well, vice versa. A low is when price comes down and then it pivots up. That V shape at the bottom it leaves is called a low. So this is the understanding of a basic high and a basic low, right? So now let's continue. Price goes up, it pivots down. This V shape that it leaves up here, what is that? That is a high. But this high is higher than this previous high. So what we would call this high is a higher high. So while this is a regular high, this is a regular low. Since this high is higher than that previous high, this is a higher high. Now again, we go down, we pivot up. What do we leave right here? We leave a low. But remember what I explained, how this high is previously higher than this high? Well, this low is higher than this previous low. So that being said, this would be identified as a higher low. Alright, now we're going to continue. We go up, we go down, we leave a high. This high is higher than this previous one, so this would also be a higher high. And now let's see what happens next. We go down, we pivot up. So this is a low. But do we see something different now? This low is lower than this previous low. So naturally, we'd call this a lower low. We also we see we're going up and we pivot down. It leaves a pivot point. We mark that out. That is a high. However, do you notice something different with this one now? This high is now lower than this previous high. So this would be a lower high. So this right here is the basics of highs and lows. We have highs, lows, higher lows, and we have lower lows and lower highs. Hope this makes sense. The next thing you need to understand is how do highs and lows show us if price is bullish or bearish. So as you see here, same thing marked out as the other chart. We have a high, we have a low, higher low, higher high, lower high. But how do we know when price is bullish or bearish? Bullish just means going up, bearish means going down. Well, if we look at this portion of the chart right here, this is bullish market structure. So when this higher high is created, this is showing that price is potentially going to be bullish, meaning it's going up when it creates this high, low, and a higher high. Vice versa. On the other side, when price creates a low, a high, and a lower low, this is bearish market structure, meaning we're going down. So this is how highs and lows show us if we're bullish or bearish. What is a market structure shift? This is essentially what you just learned. A market structure shift, you see we have a high, we have a low, we have a higher high. You see right here, we have a market structure shift. You just draw a line from your high to the right to when price creates a new high. It's just a way to identify for yourself that price is either bullish or bearish. It's the same thing as what I was just telling you. So we see we have a higher high, higher low, create a new higher high. This is a market structure shift. Price is still bullish, but then we go below this low, breaking this low, creating a new low. So this is now a new market structure shift, except price is bearish, meaning it's going down. So that's very simple. Now, how do we apply this to actual charts? I'm going to show you guys exactly how to apply this and how I use it. You can use the same exact method that I used on these examples. So I want to show some recent price action, right? I'm going to examine this portion of price action right here. All right. So first, what do we have to do? We have to identify our highs and lows. So what do we see? Price comes down and then it pivots up. So what does this leave right here? Well, naturally, this leaves a low. So we have a low right here. Then we go up and we pivot down. So naturally, what does that leave up here? That leaves a high, right? Then we come down, we pivot up. Naturally, what does that leave right here? You could consider this a low. We go up, we pivot down. What does that leave right here? That leaves a high, right? And then again, we come down, we pivot up. This is a low. We come up, we pivot down. This is a high, right? I'm hoping this makes sense. Now we come down and we pivot all the way up. So instead of creating a high that's lower than this previous high, we now break this high and our new high is all the way up here. So what does that mean? Well, we broke this high, we created a new high. This is our higher high, because this high is higher than this previous high, and I'll mark this out as well. We have a high there. We have a low here. So naturally, since we have a high here, we have a low here, and now we have a high that's higher than this previous high, we are now bullish, meaning we are potentially going up. And right here we have our market structure shift. So I hope this makes sense. This is the easiest way that I could explain it. Also, I wanted to show real quick, if we take our path tool on TradingView and we follow these highs and these lows like so, and we move this over, you can see that it follows a similar pattern to these other examples that I showed you.